Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. Citigroup really has an axe to grind this morning when it comes to AMC. At 4:57 a.m., Citigroup analyst Jason Bazinet reiterates AMC Entertainment Holdings with a sell and maintains a $1.65 price target. Now, this is all ahead of the court decision and, of course, second quarter results. And then NASDAQ and Fintel picked up the story. To repeat it, Fintel reports that on July 3rd, Citigroup reiterated coverage of AMC Entertainment Holdings with a sell recommendation. This looks like a coordinated media hit piece. Analyst price forecast suggests 47.45% downside. And then Market Watch at 5:27 in the morning. AMC fell 1% pre-market after Citigroup opened a downside 30-day catalyst watch for the stock. The move comes as investors await a Chancery Court decision that's expected to clear the way for the company to convert its AMC preferred equity units, known as APEs, into common stock. AMC shareholders voted in support of the company's proposal to convert the APEs in March, but the company was then hit with a class action lawsuit. AMC subsequently reached an agreement to settle the court fight, but a Chancery judge must approve the settlement proposal after a 2-day hearing last week. Citigroup is expecting a ruling in favor of the proposal. As a result, quote, "We would expect the value of AMC common units and APE units to converge," an analyst wrote in a note. Given AMC common units trade at a premium to the APE units, we would expect downward pressure on AMC shares in the coming days. APEs were trading down 0.6%, according to Ciara Lanane. I can't help but find it ironic that AMC hired Citigroup as an underwriter for the APE preferred shares. From September 26, 2022, AMC said on Monday it had hired Citigroup as an underwriter to help it sell up to 425 million units of its preferred stock, APE. I personally find it unsettling that Citi is being so loud this morning in light of the fact the case is still being adjudicated. From case documents in November of 2021, the company's banker, Citigroup, began work on, quote, Project Popcorn, a prospective issuance of an alternative form of equity that could convert into common stock. You may also find it ironic that the following month, the Attorney General of Texas launched an investigation into 6 major banks for collusion in lending practices that potentially violate consumer protection laws. Attorney General Paxton joined a multi-state investigation into Bank of America, Wells Fargo, Morgan Stanley, JP Morgan, Goldman Sachs, and Citigroup for potential violations of consumer protection laws. This is the third recent investigation by the Attorney General into companies for alleged deceptive trade practices tied to environmental, social, and government, also known as ESG, related actions. You probably won't be surprised to find out that if you go to MarketBeat under the question, which institutional investors are shorting AMC Entertainment, you will find Bank of America, Citigroup, Highbridge Capital, which is owned by JP Morgan, and of course our old friend Antara Capital. Now, did you know in 2014, Citigroup was ordered to pay $1.1 million over alleged illegal short-selling activity leading into 5 stock offerings? The bank allegedly improperly sold short or made financial bets against 5 public offerings of stock in the 5 days ahead of the deals, says regulator FINRA and exchange BATS. Citibank then turned around and bought stock in the share offerings. The bank bought more than 1.5 million shares after selling short over 313,000 shares in the 5 days prior to the offerings. The moves allegedly violated Rule 105 and Regulation M. Citi was ordered to pay $559,000 in fines, as well as disgorging $538,000 plus interest and profit. The bank is also to update its internal rules for adhering to Rule 105. Citigroup, of course, neither admitted nor denied the charges, but consented to the findings. I'm sure everything is okay now. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.